For me, everything is all about the lifestyle. And, that's what you live for, is your life. I don't live for my Bitcoin. The Bitcoin creates my life. My opinions are, in life, have cash flow, and then own Bitcoin. First thing is invest in yourselves. You create a business, it's a high margin business, it generates an income, it affords you the opportunities to make investments and have a lifestyle, right? That's all that matters. There's a reflexive loop that's going to happen. It's so obvious, is the US has approved custody of Bitcoin for certain banks, which is a code word for prime broking for hedge funds, which means the hedge funds will see this. Most of them haven't got custody yet, but soon they will. And that means that they will come into this space because they can trade multi-asset class. So that sucks them in. And I've talked about this. The next is the ETF will get launched at some point. Somebody will get it off the ground. And then all the RIAs buy it for their customers because it's outperforming everything and they love to be cheap and chase the trade. So this is going to be the strongest trade now. So you've got the hedge funds and the RIAs. We know the family office space is already interested. And they get sucked in the more the price goes up and the narrative goes up and more people talk about it. Family offices tend to do that. Endowment level are next because they can hold it because it's a long-term asset. So endowments can justify it earlier than pension funds can. Pension funds can't do this yet. It's quite difficult for them. So we've got this wall of money that I keep talking about that's coming. And if you throw in the public and the NASDAQ traders and the speculators and the Robin Hooders and everybody else, you've got a perfect storm. And you've got the corporate treasurers. Unfortunately, and I've talked about this a few times recently, the crypto space is not very good at speaking the language of others. We tend to impose our own language. So the corporate treasurers will not buy Michael Saylor's language because it's not the language that they speak. They don't think in those terms. Yeah. Corporate treasurer may stay at Microsoft for 10 years and then leave. He doesn't think in the same, it wasn't his company, he didn't build it. So we need to talk about how it works as a diversified asset, how it works in a corporate treasury portfolio of fixed income, commercial paper, currency baskets, all of the things that they do. We need to talk that language and show them. Once you do that, Microsoft and Apple and all these other massive cash businesses will own it. Of course they will, because it's a great asset for diversification and they don't need to buy too much of it. But I kind of think I know how to value Bitcoin, which is it's a reserve asset with a call attached. On the future financial system, we talked about opting into a parallel system. Well, one's being built. So what value is that worth? Well, that's worth a lot. So I think I can get a macro valuation. I can't for Apple. I can't get $1 trillion company and figure out, is it worth 3 trillion? I just can't do that. And that's just probably because I'm stupid, but I just don't know how to do it. So I just stay away from it. And I put out a tweet thread today that I've now can't even use my Twitter. It's kind of overwhelmed with this thread showing Bitcoin versus every other major asset, including Amazon and Apple. Right? They're all breaking down versus Bitcoin. Look, I've been in this game a long time. I've also studied history. I have never, ever seen an entire asset consume every single other asset in the world. I mean, it's extraordinary. And I think this is just the start, right? The charts I started with is, okay, what does gold look like versus Bitcoin? Well, gold is breaking down versus Bitcoin. Then what does the NASDAQ look like? Because surely the NASDAQ must be outperforming. No, it's breaking down. What about the banks? Well, the banks, we've always talked about that Bitcoin's destroying the banks. Well, the banks are at all-time lows in Bitcoin price, using Bitcoin as the denominator. What about commodities? Well, if you use Bitcoin as the denominator, commodities are at all-time lows. Okay, what about Apple, Amazon, the G4 central bank balance sheets? That's been the most powerful asset in the world. No, Bitcoin's eating them all. So Bitcoin is becoming the world's strongest narrative, and it's only just started. The pension system, okay, that's another beast. Again, everyone's like, they should do this. Well, until you can show it to them in Barra models. Barra is the model by which most of the pension industry builds their portfolio and risk management tools. But we're not talking that language. So it's like you shouting at me in French and me just shouting back in English louder, saying, I can't understand you. That's what's going on. Because they can't do anything with this. They've got a bearer asset, they don't know how to custody, that we're not telling them how it works from a portfolio diversification or risk metrics standpoint. So we'll get there, and I've already been starting to beg people who understand the Barra world to say, listen. And now who owns that pension fund asset allocation world is consultants like Mercer. We need to get them across the line. You need to teach them about it first. Then they go to the pension fund trustees, and then the pension fund trustees approve it for the asset allocators. That's a big process. The brave go first. I mean, good on him, right? Because he was in a position that he could, and he got it. And there's a few other people around that got it. But that will spread slowly, but it will come. Because I know everybody's going to hate this, but the investment banks will get into this space, and they know how to translate. They know how to speak to these other people. And that's a net beneficiary to the space, even though all of us want to protect it from the investment banks. But they can't screw with it, really, because it's distributed, it's not owned by them, nothing they can do with it. They can help create a derivative market around it, but that's coming anyway. There's nothing we can do to stop it because humans want leverage for some reason. The chart patterns alone all look like they're breaking. So this is very interesting. I've never seen this before in my life. Bitcoin is up 97 and the banks are down 30, right? That's 120% outperformance. This is incredible. We have this bifurcated world where NASDAQ stocks were going up, but really everything from oil markets to banking stocks were all doing the opposite. And the old economy names, the triple B credit companies, the most indebted large companies in the world, they all look the same. They basically bounced a bit from the low and then flatlined and then started rolling over, which is actually exactly the same as the real-time economic data. So the European economic data is rolling over and tipping down. Guess what? The European banks are tipping down. So they're reflecting the economy. The bond market looks the same too. So as we said, that cash flow, racy business model of SaaS businesses kind of decoupled. Everything else is the same. But banks, if insolvency really is the problem, and how insolvency is a problem is, if I'm right and GDP growth stays negative for the next 12 months, there's not enough cash flow to pay for the debt. Simple as that. Whether it's at household level, foreign corporation level, or US corporate level, small and medium-sized enterprise level. So that creates more insolvencies as companies go insolvent. And what the banks are telling you is there's a problem here. And that's what the bond market's telling you. And that's what General Electric's telling you. That's what AT&T's telling you. They're all saying there's a debt problem here. Deflation always have been. Firstly, the trend's in my favor. And secondly, I just think that with an aging population, a debt dynamic like we've got, a relatively strong dollar, and technology, it's almost impossible to generate meaningful ongoing inflation. And we'll come into some of the big changes that could come from fiscal and stuff like that, and we'll talk through that a bit. But I think generally overall, that's the super trend you've got to fight. Now, what do you call inflation and what do you call deflation? That's the other thing, is definitional issues here. So I think that fiat currencies are deflating versus hard assets. That's not necessarily price inflation. I'm about to write a piece for Global Macro Investor about wage deflation versus actual inflation. Maybe it's wages, because when you look at most goods versus the price of gold and stuff like that, they haven't really changed price. So it could be that wages are deflating, which is something I want to dig into, because real wages haven't gone up since 1974. So there's a number of issues here, but I'm very much biased towards deflation for now. The other thing I know is my inflation is different to your inflation. So I just think that the whole thing is arcane. So what are we trying to solve for here? What do we care about here? We don't have bond yields that are going to offset anything. That game's gone. And we can get into the discussion about Bitcoin and gold and that kind of stuff to offset the devaluation of currency. I think the real issue is incomes don't go up enough. And that's the real issue here. In the 1970s, we had inflation because wages went up and pushed up cost of goods. We don't have that. We have wages that just do not go up. One thing is the millennials themselves are driving it because they're trying to get into property at the same time. They can only afford the same kind of price range. Well, guess what? They've all pushed themselves out of it. Rich people have obviously had too much money because they've had access to credit, unlike average people. So that's pushed up the value of those things. We've seen, fine art and wines go to crazy prices, cars, because of the same thing, of the money of the rich people. Then there's the stuff around which corporates have power in Washington, and that is pharmaceuticals, healthcare, and some levels of food and stuff like that. They have been abusive of their monopolistic powers for a long time. So I think the balance of power shifts. What is really nice is that the person who's not the patsy is the little guy for once. The little guy is the winner. They are going to take their share. And that is amazing.